Good morning and welcome to the Better Business, Better Life podcast. I'm your host, Dave, and we've also got Raj joining us. So Raj is one of our team leaders. He is the team leader of the Wellington region. So today we're going to talk about ProvTax and also Tax Management New Zealand, which is a tax pooling service. So we thought we'd give you a bit of a rundown on what is ProvTax, common mistakes with ProvTax, a few kind of scenarios. And then we just wanted to talk about tax management and how you can utilize it to, I guess, increase cash flow and generally kind of manage your tax obligations in a better way. Does that sound about right, Raj?
Yeah, that covers it, I think.
Yeah. How's your week been, Raj? Been good?
Yeah, we're actually digging through ProvTax right now as a company.
Yeah,
so
it is
timely.
ProvTax time, isn't it? Yeah. It is definitely that time of year. So, Raj, I'm going to ask you this as the formidable accountant. What is ProvTax?
Oh, here we go. Yeah, so new business owners sometimes think it's a whole different type of tax, which is not the case. It's actually just a way of managing your income tax liability.
Yeah.
So we pay it in installments throughout the year instead of a big lump sum at year end.
Yeah.
And the intention is you'll cover it, or a large percentage of it throughout the year, and there'll be a small top up at the end of the year.
So just to be clear, it's not something that we as Rightway choose to do. It's something that IRD do. So they're basically taking your tax payments in advance to make sure that you're on top of your tax come the end of the year. Now, with any kind of provisional style anything, they're taking a best guess at what they think your tax bill will be. Now, there is a formula for that, isn't there?
Yeah, it's not overly scientific. They expect business performance will increase, 5% year on year. So it's basically just an uplift of 5% of your last tax return, which is not always accurate, but that's the ID expectation that we sort of use as a starting point in calculating your ProvTax.
So I guess from that point of view, a key takeaway straight away is if your business is growing exponentially, you will end up with a tax bill even though you're paying your ProvTax, because they're only looking at you growing by 5%. And the same, the opposite direction. If you have had a massive downturn for whatever reason, which I guess, over the previous few years, a few people would have seen, you could have a reduced tax bill at the end of the year. Sound about right?
Yeah, makes sense. That's why, just in terms of forecasting your tax liability, having your data and zero up to date, things like that, just really, really crucial, because that 5%, that's not very scientific and not the best way to project your tax liability.
Everyone always talked to me when I was starting out a business that it's like you get the double tax bill that's going to come at you at the end of year two.
Yeah, it's a common thing for people that are new to business. The year one tax liability, there is obviously no expectation for ProvTax in year one from IRD, but when that tax does become due at year end, you're sort of having to start prepaying your year two ProvTax. So you can sort of get hit double tax sort of all in sort of close timing, which, I mean, for a new business owner, that's cash flow wise, it's definitely got to hurt if you haven't expected it or seen it coming.
And I think the tax dates always kind of really trip people up as well. So if I started trading on the 1st of April in 2022, just because we're in 2022, we'll make this easy, I'd get to the end of the tax year, which would be 31st of March 2023, but I wouldn't be expected to pay that terminal tax until
7th April the following year. So
7th of April 24?
Yeah.
And then my ProvTax would kick in
August, so even during the first year. So it also depends on the filing of the tax return when we file that.
Yeah, as to when it gets filed.
Yeah, but the payments, there's a ProvTax payment in May as well, 7th of May, very shortly after that, obviously that terminal tax date. And that's a common thing that catches businesses out.
And then once you get through this kind of terminal and first prov, you then kind of get into the cycles of just paying your provisional tax. So there's just kind of this little, I guess, sticking point, isn't there?
Yeah, it's a rough period.
When you kind of get that first terminal and then your first prov tax, and then you kind of just get into the rhythms of paying your ProvTax from that point afterwards. And how many ProvTax payments are there throughout a year?
It's split into 3 payments. Unless you're on 6-monthly GST, then it's split into 2 payments. It depends on your balance date. Just for the most common balance date, March, it's the first payment's in August of that particular year, and then January of the following year, and then May is the final one.
I appreciate this isn't the easiest topic for listeners to kind of understand. And I guess there's a lot of dates and a lot of years and a lot of variables that you're talking about. So I guess trying to give you an overview and just encourage you to like talk openly with your accountants about it, and they will be able to provide you some good advice. Talking openly with their accountant, you can come up with a better solution. And I guess the better solution that we're talking about today is tax pooling or tax management New Zealand. Do you want to give a bit of an overview on that, Raj?
Essentially, tax pooling allows you to deposit all your provisional tax payments into an account held by what's called an IRD approved intermediary. And those payments are date stamped. So you can pay your provisional tax payments into that pool as cash flow allows, and Tax Management New Zealand will transfer that to IRD, backdate those payments. So IRD will think you've paid that on time, and this removes some IRD penalties and reduces the interest cost significantly as well.
So when Raj says you pay it over to this intermediary account, what he's actually saying is you can actually use tax management to pay your prov tax bill, and then you effectively pay it back. So it's kind of like this big pot of money that's sitting against the IRD. So effectively, it just means that you can then trickle feed out your prov tax rather than having these big lump sum payments. So it's really good for helping with cash flow. I actually had a company that I took them over when I first started with Rightway, and they had decided to safeguard themselves against the dreaded C word, against COVID and the pandemic, by not paying their tax bill. So they kept a large chunk of cash back, and they just sucked up their use of money interest they were getting charged by IRD and the penalties, because they wanted to just ensure they had cash flow in the business. And actually, it would have been a better thing for them to do would have been to use Tax Management New Zealand to pay their prov tax and their tax bill, and then actually trickle feed the money back to Tax Management New Zealand, because they would have got less interest and penalties would have been wiped. Have you got any scenarios along those lines for tax management?
Yeah, so just on your one, it's definitely not a good idea to ignore IRD debt and let it sit there.
Definitely not ideal.
Yeah, so essentially, we touched on it earlier, the tax payment dates, the P3 payment, which is due in May, and the terminal tax payment, which is due on 7th April. They're quite close together. So another advantage is with tax pooling, clients like to use is to defer the payment of their tax. So with tax pooling, get to defer up to 75 days after the terminal tax date, which works out to be about mid-June. It just gives it a little month and a half leeway for clients to defer their tax liability, which helps a lot of our clients.
So what is tax management cost? That's going to be the deal breaker here, isn't it?
Yeah, so first I'll tell you what it saves. It saves ID penalties, which can really pile up. As long as you're paying into the tax pool by the particular due dates, the tax will be backdated and there will be no ID penalties. And interest as well, that you do get charged interest with TMNZ, but it's about 30%, 35% lower than what IRD charges. So it's definitely a better outcome.
So IRD charges, is it 7% currently?
Gone up,
money interest?
In the mid 8% range. So
wonderful world of inflation. That's a whole nother podcast. We'll ignore that. So use of money is up to 8%, and obviously it comes in less. So, you're saving a few percent, which depending on the size of your tax bill can actually be quite significant. So that's always a good thing to know and understand. So if you wanted to get kind of tax management set up, what's the process for doing it?
Get in touch with us. We will send through a quote. It's quite a detailed one that breaks down how much you'd be paying with IRD and how much you'd be paying with Tax Management New Zealand. It's a nice way to see, you're saving a bunch of money, and gives you options of the due dates and a little bit more certainty around cash flow as well.
I personally was always scared of tax. I think 90% of the companies we work with are scared of tax. They're like, but you don't owe IRD money, just full stop. So I always kind of went the opposite way, and I always did PAYE salaries just because I knew that limited my tax liabilities. But I reduced the options to be able to do smart things with the tax that I could have just been holding. I could have been offsetting it in different ways or investing it into other options and drawing it out when the time was right. So I guess this is a really good opportunity, isn't it, for, the companies that we work with and people who are listening to the podcast. It's like, don't be scared of tax. Look at ways that you can utilize it smartly, but also understand the options that are available to you in the form of tax pooling, where you can get the kind of best interest rates and utilize that kind of thing, because it doesn't have to be big and scary, I guess.
And if you have a plan and if you're looking ahead, it definitely won't be. So things like a tax forecast, or even just having a percentage a savings percentage of your income, of how much is set aside for tax. Just working with your advisors on that, coming up with a percentage. I mean, you'll probably never run into tax issues if you get those sort of things right.
So this is a real common one, and I know we're going to deviate slightly, but I guess this is what we do best. So from the point of view of setting aside tax, so I'm a first-year business owner, okay? I'm coming to you. How much money should I be setting aside to pay my tax?
As an accountant, you're never going to get one number out of it as a percentage. But
come on,
yeah,
Raj.
so around that 30% mark, you should be covered for GST, income tax, and stuff like that.
So 30% of the money that comes into my account?
Yeah, of the gross income. The only reason I say that is it'll be a little bit higher. It depends on obviously your business model. There's businesses that have no costs running through, and there's the other side as well. So
if it has no costs running through, you're likely to need to set aside a bit more. Whereas if the business has costs,
so it's different for every business. If you start roughly with that 30% mark, you should be good as a new business owner starting point.
Yeah, and then so obviously you get to the end of your first financial year, and quite often you don't have to pay tax straight away. So quite often a common mistake or a quite common question is, I need to get my tax bill done. I need to get my tax return done, when you've actually got quite a big period before you need to file your annual returns. After your financial year, how long do you have before you file your first annual return?
So with the extension of time you get with a tax agent, you'll have a full year, 31st March of the following year, to get that sorted. And again, like you said, that's a lot of time knowing what your draft position is at the end of March to start setting those funds aside if you haven't already done so.
Although you effectively are using your year two funds to cover your year one tax bill, so you're kind of getting yourself into a pickle. So make sure you set aside tax from the start.
Exactly.
Just because you've kind of dodged it for a year doesn't mean that it's not going to be coming at you. No. I wonder how many people that would get into business. But I wonder how many businesses would fold at the end of year one and restart themselves. It's a government incentive, isn't it? Or maybe not a government incentive. Okay, so just whilst we're talking about tax, because I know people can kind of get a little bit confused. So we've talked about setting aside 30%, which is a real good figure for people to take away. Obviously, it can be kind of in or outside of that. Where does your GST come into that? So GST is your goods and service tax, just for those listeners who don't know.
Essentially, the GST funds are not yours. The GST received needs to be set aside straight away, and the GST paid needs to be, you will get that back at each GST return.
So is this inside or outside of that 30%?
It works out to be inside. So you don't need to be setting aside 45, 50% of your income. And that's purely factoring in you're going to have expenses to deduct. Again, different business models will be different. If there is no expenses, that percentage will increase. But it's just a good starting point for year one.
Yeah, okay, cool. And then GST, unlike prov tax and your income tax. So when we're talking about income tax and prov tax, they're actually the same thing. GST can either be done bi-monthly, 6 monthly, or monthly if you have a bigger turnover.
Just one thing on Tax Management New Zealand, we can't use that for GST and PAYE, just these recurring payments. It's purely just for income tax.
Income tax returns. Hopefully after that podcast with Raj, you have a bit more of an understanding around prov tax and Tax Management New Zealand and how it can potentially help with cash flow in your business. If you have any questions, please feel free to reach out. So you can either hit us on our social channels on Facebook, LinkedIn, or Instagram, or you can contact us at marketing@rightway.co.nz. Remember to hit subscribe on whatever channel you're listening on, and we'll be back next week for another round of the Better Business, Better Life podcast.